Well, good morning, everybody, and welcome to our Rebuild and Recover webinar. Welcome to you all. I'm joined today by Alan Steckler, Ben Grunberg, and Harry Abrams. Harry's joining us from Taylor Vinters legal firm, so thank you very much for joining us as a guest this morning, Harry. We've got a number of areas to cover today as part of our COVID-19 Q&A update. So we're going to be looking at future-proofing your business. We're going to look at the latest roundup of government support measures. Harry's going to cover employment and workplace health and safety issues. And we're also going to have a look at other aspects of a kind of back to normal world, including IHT, tax planning and R&D tax credits, and whether as a business you qualify for those. For those of you that came along to our last Q&A, you'll remember that between each speaker we allowed time for questions. So please use the Q&A button at the bottom of your screen. We'll try and take as many questions as we can live today, but any unanswered questions we will come back to you on a one-to-one basis and try and get everything answered as a result of today. So post your questions as we go along. As I said, we'll try and answer those as we go. So we'll start off with Alan, who's going to look at the future-proofing aspects of your business. So over to you, Alan.
Thank you, Jo. Good morning, everyone. Well, COVID-19 has generally given rise to extraordinary times. Making sure a business has good management techniques is seriously key, and more than ever is key, and in particular, good cash flow management. Effectively, COVID-19 has created a new normal, and adjusting to this new normal and making sure business models and plans follow that new normal is going to be really important, because objectives will change and the ways to achieve those objectives will change as well. So what is really important is essential good housekeeping, balancing the books, controlling costs, ensuring the right revenues are met, and essentially making sure that there's cash in the bank and the business has enough working capital, and also making sure that you actually control the areas that actually you can control, because there are so many areas that you can't due to all the uncertainties in the environment. So having a good financial plan and forecast is really essential. Forecasting where the business will be in maybe 6, 12, 18 months, 24 months is going to be so important. And also establishing when cash is needed and when the business may be short of cash, and at what times and stages of the business cycle will the cash be needed, and what actions can be taken to ensure the cash is there. I mean, there are some simple techniques that businesses can look at if they start looking at it now. One is you may have existing payment terms with your suppliers. Could those be improved in your favour and therefore changed? And also looking at sales. Yes, there is a need to make sure that you meet targets, you have the right level of sales, but are you trying to achieve sales that are such a high level that you are actually overtrading, which in itself creates more problems because you've got to fund your suppliers, and there's no good making something and then not getting the cash in, but you've had to pay your suppliers who are jumping up and down. And also making sure you're doing the sales at the right margins, because again, having vanity of sales doesn't necessarily bring in the profit or the cash. So a good area a lot of businesses don't do, from my experience, is often ask for money on account. And it's so easy to do it, particularly if you've got to cover third-party costs. So that is really essential. Again, looking at all your assets, do you need to buy things? Do you need to review how your capital expenditure? Can you lease things? Can you buy equipment on HP? Looking at your overheads. I mean, this is definitely a time to look at streamlining a lot of the overheads. Can you outsource certain services? Very often that can be done at a much cheaper price. And the key thing is credit control, going back to cash, because you make the sales, you have payment terms with your customers, are they adhering to them? And if they're not, you need to make sure you get the cash in. And the other thing is, it's a great opportunity now to basically look at some of your contracts and look at your maybe property leases that you have with your landlords, because some of them could be too onerous for the business going forward. You may have had to scale down. I mean, now is the time to do it. You have a good reason. COVID-19 has created opportunities for people to do that in a strange way. And as the old saying is, if you don't ask, you don't get. And you definitely should be looking at those areas. But looking at the businesses now, I mean, businesses are suffering from COVID-19. I mean, they're having reduced sales. They've got costs that can't be covered. They're needing cash. Now, there are available grants and government aid in terms of bank loans, and I won't spend much time on this at all because that's an area that Ben's going to look at more. But there's rates grants, there's these small bounce back loans, the furlough claims. There's ways that you can defer in this current quarter your VAT till March next year. So again, that could be a significant cash flow saving. You could look at making arrangements with your PAYE, your corporation tax. And self-employed, are you eligible for any grants? So did you meet the criteria? Do you need to defer your 31st of July tax payments? Because that could be something that you need to do. So yes, all about cash flow management, and having a good business plan as a business is key. Something that we do a lot of work with clients at Grunberg & Co, and it's something that we can help you with because that will certainly make a difference to your business. Thank you.
Thanks, Alan. That leads us actually on to Ben, because you've touched on a couple of points there, Alan, which related to some of the government business support measures and how they fit in with future-proofing your business. So, Ben, would you like to give us an update on where we are with the government support measures at the moment?
Thanks, Joe, and good morning, everyone. Alan's led quite nicely onto the government measures, and we're talking about cash flow here. Cash flow is really important right now to get us through this difficult time and beyond thereafter. There's a number of measures that are currently in place which can help improve your cash flow. Again, this is deferring the costs to the future, but giving you some support now. And that's things like the VAT deferment, which is automatic. Any VAT liabilities that are due between now and 30th of June are automatically deferred and can be paid by 31st of March without any interest or penalties. Same thing applies to the second payment account for income tax, which is due normally by the 31st of July. And the government's brought out a couple of schemes such as the government grants, which are available for small businesses and those businesses paying business rates, and also the CBILS and bounce back loans. Now, CBILS and bounce back loans, the CBILS first are loans anything up to £250,000 before taking into account any security. And the interest is paid by the government for the first year, so effectively interest-free for the business. And thereafter, interest rates are about 4.5%. The bounce back loans have been relatively brought into effect, I think, not so long ago, and they've been massively uptaken, and they are loans of up to £50,000 based on up to 25% of your turnover for the period to December 19. And they are, again, interest-free for the first year and 2.5% thereafter. So really valuable loans and great way to kind of get us through this negative cash flow period. The other beauty about them is that they are available for the companies which were in distress as at the 31st of December. So it doesn't have to be a profitable company looking to obtain those loans. But there's been a couple of updates, and there's constant updates to the government schemes and incentives over the last couple of months, and we expect to see more over the next few months as well. The main changes that have come out recently are changes to the furlough scheme. And as most of you will be aware, the furlough scheme relates to employees who are unable or are not working at the moment. A company can choose to put them on furlough, and in which case the company would be reimbursed for up to 80% of their salaries, capped at £2,500, and the employees aren't able to work. So it's a really good way to support employees, keep them employed whilst there's no work for them to do. Now, this was a temporary measure brought in starting from 1st of March 2020, and it was extended for 4 months until the end of July. Now, the government recently announced an extension of that scheme until the end of October, for 3 months from August, with some slight tweaks. And I'll read out the kind of the legislation of it because it's key here. Sorry. employees who are currently using the scheme can be brought back on part-time. Well, not directly legislation here, but the slight tweaks are twofold. Firstly, the employees can be brought back part-time, so you can be part furloughed and part working. Something you can't do currently. Currently, you can only be put on furlough. An employee can be fully furloughed or employed. If they're part-time, they can't be furloughed. So there's a way around that currently, which is the furlough period must be for 3 weeks, minimum of 3 weeks. So you can put an employee on furlough for 3 weeks, bring them back for a few days or a week, then put them back on furlough. It's a way to get around this part-time working issue. But employers and companies are shouting out for some more flexibility. And this is coming into effect from the 1st of August. Now, the key thing here, and the reason why I wanted to read out the legislation, is that it says employees who are currently using the scheme. Now, we don't have much detail right now. We're expecting to have more detail by the end of the month. But I would just be careful here. This is, in my view, an indication that the employee must be on furlough prior to the 31st of July for this scheme to be able to apply post 31st of July for them to become back part-time. So just be careful of that. And the other thing, the other tweak the government brought in, they're giving one hand, take away with the other, is that they expect the companies to contribute towards some of the furlough rebate. So again, employers will be asked to pay a percentage towards the salaries of their furloughed staff. The employer payments will substitute the contribution by the government is currently making, ensuring that staff continue to receive 80% of the salary up to £2,500 a month. Now, this is, again, we don't have much detail on, but this is an area where we are kind of trying to read between the lines. Now, currently the government provides 80%, up to 80% as a rebate to the company, whilst employees are on furlough. Now, we would expect that to drop, and there's been talk about that dropping to about 60%. But with the employees, we're still receiving their 80% salary. So the expectation will be something in the region of the remaining 20% being topped up by the employer, the company. This is going to obviously have a big impact on those companies who can't bring their staff back, where they're now going to have to pay 20% of their salary, in essence, for staff who are at home, not able to work. This is really key because we've got now a few months to kind of be proactive, look at ways to get around this, and look at ways in which to deal with this when it comes into effect. Because you don't want to be laying off staff, but you also want to be looking at ways in which to save tax and save costs post August. The other thing that I want to talk about, which is really not being mentioned much by the government and by the guidance online, is the top-up to the local grant scheme. Now, this is a top-up that was brought into effect, was announced on the 2nd of May. Nothing really has been mentioned about it until recently, the 13th of May, the government came up with some more guidance on this. And this is a top-up grant, which is to fill in the gap for those companies who currently pay rent, but don't pay business rates. And we're talking about things like those who are using shared offices, those who are working in co-working spaces, those who are paying rent, but their landlord is paying the rates. Currently, they're not entitled to any grants. And so the government announced on the 2nd of May the availability of up to £617 million of extra funds to give a top-up grant in this respect. Now, they haven't really given much guidance, but what they have stated is that it's for the local authorities to administer. I've spoken to a couple of local authorities, and it's, again, really limited guidance from the government, and it's very, very discretionary. Now, the 2 points that I've highlighted is the guidance the government has said is this should be used for predominantly small and micro businesses, businesses with relatively high ongoing fixed property costs, businesses which can demonstrate they've suffered a significant fall in income due to the COVID crisis, that were trading on the 11th of March 2020 and currently occupying property or part of a property with a rateable value of less than 51,000. So in addition to that, they've said what type of businesses this would affect. And this is those in shared spaces, those in regular market traders, for example, small charitable properties, and bed and breakfasts who currently pay council tax rather than business rates. It is up to the discretion of the council to give these grants. And the grants are split into three levels. A £25,000 grant, which is the maximum level. It drops down to £10,000, and then it's discretionary underneath that. Again, it's all at the discretion of the local authorities. There's no guidance on how this is being dealt with, and most of them are trying to tackle it independently of one another, but they are collaborating with each other as to how they're going to facilitate these grants. The one thing that was highlighted, and this is really something which is you need to bear in mind, is that the availability of these grants and the value that's being provided is much, much lower than any of the other grant schemes and the money that's been put aside for those. And for one example, Hackney Council, for example, I believe they've identified something in the region of 7,000 businesses which will be eligible for this grant, this top-up grant. But they reckon they'll have enough, sufficient funds available to support a few hundred at most. So if this applies to you, definitely contact your local authority. Make sure you're applying for this grant, because it's an application. It's not automatic, and be on top of this, because this is something which is only going to be available for a small number of businesses. And I think that covers most of the updates in the last few months, the last couple of weeks, but we're seeing more updates every day. So by all means, get in touch if there's some questions or concerns you have about some of these schemes.
Ben, just a couple of questions actually before the webinar started. There's some news out today about sick pay reclaim. Could you just talk us through that one? Because I think is there a portal open today, or
the portal will be open on the 26th to administer the sick claim reclaims, the SSPs, and there's a detailed guidance online of what you'll need to have to hand for that reclaim, and making sure that you have a government gateway and are they able to access your PAYE online is probably the best thing you can do right now, so you're ready for to make those claims.
And another question that came in earlier was about the CBILS application. So I think there's a couple of businesses that have applied and been rejected, and they were wondering whether having a cash flow forecast before you reapply is a wise thing to do.
It's the chicken and egg scenario. A cash flow forecast is one of the things the banks will look at and put the most amount of value on when it comes to applying for a CBIL. They require two forecasts, one showing the business and how it would have performed had COVID-19 not impacted you, and one showing the impact as a result of COVID-19. And they want to see from the second one, the business come back to a profitable position. And the terminology they use is the company needs to be sustainable and viable, which basically means the company needs to show that post getting the CBIL and post COVID-19, the company is still viable and still a profitable, it can become a profitable making business thereafter. So the cash flows are really vital to that application process, and it's often the reason why there have been rejections to the application. The other thing that comes with that is the narrative and explaining why you need the money, and the impact of COVID-19 is again one of the reasons why there's been rejections. You can look to reapply. I would speak to your bank if you're looking to reapply directly with the bank that you've already applied through, because there might be limitations on that. Otherwise, I would speak to someone like HSBC, or I know some of the more fringe banks are starting to look into this, like Starling or iWalker, and apply to them directly.
Okay, thanks, Ben. We have got a question from Juliet here about can we find guidance online for the government business interruption loan scheme? Ideally, we want to point you, Juliet, at the Grunberg website. Ben?
We have some great guidance on our website, as Joe's quite rightly pointed out. There's also some good guidance links which I can share with you in a bit. The guidance online is quite minimal. In that it says it highlights the eligibility for the loan, and the requirement that effectively you had to be suffered by, had impacted by COVID-19 and the size criteria of the company and the size criteria of the amount that you can get as a loan. In reality, because the CBILS, and we're not talking about the bounce back loans here, the CBILS are being administered by the banks are really setting the details themselves as to what they look for. Now, they are looking for forecasts and forward-looking measures, and they want to see certain things. And reality is they're the ones who you should be speaking to ascertain whether it's the right fit for you. The bounce back loans is slightly different. That's the less than 50. That's the £50,000 loan and under. They've been, whilst there's a little bit of legislation online, it's really set as the rates have been set by the government. The terms effectively been set, and the application process is very straightforward. There's no future-looking requirements. It's based on a little bit of past performance, and it's a one-form submission. We've seen the application for the bounce back loans being done in a day, and money's received 3 or 4 days later. They've been very efficient.
Okay, thanks, Ben. Well, at this point, I'd like to bring in our guest, Harry Abrams from Taylor Vintners. Harry, would you like to have a talk through on the employment and workplace health and safety issues?
Yeah, absolutely. Thank you very much, Joe. As Joe said, I am an employment lawyer at the London law firm Taylor Vintners. And in the past sort of few weeks and months, we've obviously been advising a lot of companies about the employment implications of COVID-19, particularly what's been categorized as the F word, furlough, and also now in the last couple of weeks about a return to work, because now, since Boris's announcement a couple of weeks ago, we are now beginning to see a roadmap for how employers can safely bring their employees back to work. So what I plan to talk about in the next few minutes is briefly some interesting aspects of the furlough scheme. Obviously, Ben covered sort of more of the technical points of furlough, all of which I agree with. But I'm just going to run you through a few issues that our clients are having, and maybe you're experiencing the same things. And obviously, there's a bit of confusion out there as to exactly how it works. So as Ben said, we now understand that the furlough scheme is going to be running in one form or another until the end of October. But from the 1st of August, there are going to be some pretty material changes to the scheme, all of which we're currently awaiting further guidance for. But as Ben said, it's going to be more flexibility around part-time working, and certainly we'll be looking at an employer contribution to share the contribution that the employees are getting. I think the first misconception of furlough is that it involves the employee and there's a relationship between HMRC and the employee, and that's really not the case. The furlough scheme is an agreement, an arrangement between the employer and HMRC to help them subsidise some of their employees' salaries. The reason that's so significant is because we keep hearing about the 80% being bandied around, and a lot of employers think, oh, that's great, 80% is going to be covered, therefore I will just pass on the 80% that I get from the government onto my employee. And that would really put them in a quite a dangerous position unless they have the employee's consent to reduce their salary down from 100% to 80%. And so our advice that we've been given is, no, you don't need your employees' consent to be put on furlough. That is a decision completely decided upon by the company, by the employer, so long as the selection is not discriminatory. And by that I mean, if you decide to put the oldest 10 people of your workforce on furlough, that could leave you in a pretty tricky situation. But you don't need their agreement. They don't need to sign anything, say, I agree to be on furlough, because they have a right to be paid. They don't necessarily have a right to actually do work. So if you're just putting them on furlough and you're carrying on paying them 100%, no agreement is needed. When you need their agreement is if you decide that you will only be passing on the subsidy that you get from the government onto that employee, and suddenly they're only getting 80% of their pay. And so at that point, there needs to be an agreement between the employee and the employer that for the period of furlough or potentially longer, they agree for their salary to be reduced to 80%. As Ben also said, furlough has to last a minimum of 3 weeks. And what we're seeing now is a lot of clients are rotating their employees on and off furlough where possible. This has the advantage of keeping their employees engaged as much as possible. It also gives more of a outlook to the employee of fairness, because you're not just putting a few on furlough and sort of leaving them sort of unaccounted for. You're going to bring them back as soon as you can. So that's important. And what's also important is to remember that, yes, they cannot do any work during the furlough period, but they can still do training as long as this doesn't generate any revenue for the company. So it's a good opportunity to make sure your employees are trained up as best as they can be to carry on with work once the furlough period is ended. We also see a lot of questions about what an employee can do in regards a different employer during the furlough period. And it's been confirmed that yes, you can work for a different employer, obviously not an employer within the same group as your primary employer, but you can still take on other work for a different employer while you are on furlough. Interestingly, you can also be furloughed from 2 employers at the same time. And again, they're treated completely separately. So you could be receiving 80% of your salary under employer A and then 80% of your salary under employer B. We've also had questions about whether you can furlough an employee during their notice period. And again, from our understanding, there is absolutely no problem with that. There is no obligation for the employee to come back to work at the end of the furlough period. I know in USA at the moment, there is that obligation. So there are a lot of companies who aren't looking to get the help from the US government because they think there's a real chance that they're not going to be able to carry on employing their employees after their version of furlough ends. But that's not what it's like in the UK at the moment. So that's absolutely fine. And you can also engage in consultation with your employee during the furlough period. So if unfortunately you do need to look to do redundancies, there's nothing stopping redundancy consultation happening during the furlough period. There have also been a lot of questions and debate around sick pay during furlough. And what I would say to that is, yes, the guidance still remains slightly unclear and actually contradictory in places. You can move sick employees over to the furlough period, over to the furlough scheme, sorry. And the position is that if your employee is already on sick leave, then really you should wait for that sick certificate to expire before you then move them onto furlough. And whilst their sick note is still valid, you can just pay them under the statutory sick pay, which obviously depending on your size of company, you can claim some of that back, or company sick pay in the normal way. If you have employees who declare that they have become sick, whether COVID-19 related or otherwise, during the furlough period, the employer's got discretion as to whether to pay them SSP or just carry on paying them under the furlough scheme. More often than not, we find that employers are just keeping their employees on the furlough scheme because it's less of an administrative burden, and more often than not, the employee is in a better position if they carry on under the furlough scheme with respect to the income coming in. The only thing to note with furlough and sick pay is that the scheme does not cover SSP. So if you are on the portal on HMRC's website and you're looking to make a furlough claim, you mustn't include any SSP contributions as part of that claim. Another particularly tricky area with furlough is annual leave and holiday. And whilst obviously we're not going to be flying off to any exotic places like we normally do, there is still an opportunity for employees to take holiday. And this can be a real benefit for the employer, and it can help cash flow because they're going to have to take their holiday at some point, and maybe it's better for the employer to take it, for the employee to take it now whilst they're on furlough and not doing any work, rather than closer to the end of the year when hopefully your consumer demand is up again, and then suddenly you've got a lot of your workforce putting in 2-week annual leave requests. So an employer does have a statutory right to put their employees on holiday. There's notice that you need to give them, which needs to be twice as long as the amount of holiday you're mandating them to take. So if, for example, you want your employee to take a week's holiday, as long as you tell them at least 2 weeks before that first day of holiday that they're required to take, that's absolutely fine. And obviously, if they're on furlough and potentially receiving only 80% pay, we often get the question, well, what rate of pay do I pay them? Do I carry on paying them the 80%, or do I have to top it up? Our advice is that we think technically they deserve, or they are entitled to, their normal, in inverted commas, rate of pay. And that would really be an average over the last 52 weeks. And so more often than not, it's going to be based on the 100% salary rather than the salary they are receiving during the furlough period. So that's something to consider. But again, if cash is tight, on a commercial basis, you could still pay your employees the 80% for the holiday that they take. And then if anyone raises an issue with you because they've been on the government website, or they have a friend who's an employment lawyer and said, actually, you get 100%, then you can deal with that situation then. There's no extra financial penalty. It's just making good on that extra 20%. And what we've been advising a lot of our clients is, as I said, using accrued holiday smartly can be a big tool for companies during the next weeks and months. For the calculation on furlough, there's obviously the HMRC portal to submit your claims. From my understanding, it's actually relatively simple to log into the portal, and it's quite user-friendly, albeit some of the calculations, as I know Ben has put on LinkedIn and other sources, can get a bit complicated. More often than not, it should be quite straightforward to use the portal, which is obviously good news. And the final thing I'm just going to say on furlough is just a few do's and don'ts. So you do have to keep a record of correspondence that you've had with your employees about their agreement not to work during the furlough period. And that is very important. So yes, you don't need their agreement to go on furlough, but you do need their agreement that they're not going to do any work during the furlough period. That you should keep for 5 years, because HMRC have reserved their right to audit companies once sort of everything's calmed down a bit. So you don't want to get caught out and have to make a repayment to HMRC. You should keep a record of all the calculations that you do for when you make the claims. And also it's good practice to keep a record of the decision-making process behind your decision as to who to furlough. So again, if an employee later alleges that there's some discrimination or unfair practice, you've got a clear audit trail as to why you selected those you selected. A couple of do nots. So obviously you should not ask your employee to work during the furlough period, as this will invalidate the claim. As I said before, you shouldn't discriminate against employees based on protected characteristics. So disability, age, like I mentioned earlier, sex, race, or religious beliefs when deciding who to furlough. And obviously, and it goes really without saying, you should not make any fraudulent claims under the scheme, because HMRC will be auditing the great majority of claims. So that's really almost a whistle-stop tour of furlough. Obviously, if you have any specific questions, my contact details, I understand, are on another slide, so I'm more than happy to discuss it with you after this webinar. The second part is on health and safety. So obviously, Boris put out his roadmap as to how employers should bring back their workers, when they should bring back their workers. And it's not as simple as that in practice. So we've had lots of questions from employers about how to manage it, not to expose themselves to any risk. And it is a difficult situation, and it will vary from company to company and workplace to workplace. So we have some clients who have employees based in factories as well as in the office and on shop floors. And there is different advice on their health and safety in all different premises. So it's certainly not a one-size-fits-all approach. I think the primary thing to remember is that an employer has to do all it reasonably can to set up a safe system of work for its employees and to make sure that is implemented. A breach of that duty is potentially a criminal offence. So it is of utmost importance that we try and get this right. And also on an individual basis, an employee can allege that you are in breach of your duty to them to keep them safe. and therefore they could resign and claim constructive unfair dismissal if they have over 2 years service. As I mentioned, the government has issued guidance, and there are 8 guidance notes that are all industry specific about how best an employer can go about discharging their obligations. I think the main thing that we need to remember is, obviously, if you can work from home, you should carry on working from home. And this is likely to be the position indefinitely. We've already seen Twitter announce that all their employees are going to be working from home, irrespective of government guidance, etc., indefinitely. And I think we will begin to see a change to the landscape of the employer-employee relationship as employers begin to realise that they can save money on overheads for rent, etc., if they can have their employees working from home. So the overarching obligation to keep employees safe obviously also counts when they are working from home. It's not just in the premises that the company owns. And this can be more tricky because you obviously don't have as good of an oversight as to what employees are doing when they're working from home. But this is when the employer and managers need to be active in their obligations. They should find out sort of how the employee's working, what equipment they need, and make sure that they're working effectively. We've heard some stories already of employees who spend their entire day working in bed, not because they're lazy or anything like that, but just because they don't have a desk. They may not even have a kitchen table that allows them to work comfortably. And obviously this can have sort of physical impacts on the well-being of employees. So it's worth engaging in a conversation with your employee about how you expect them to work from home and how they are able to work from home. We also need to be aware of the GDPR implications and breach of confidentiality on home Wi-Fi networks. Obviously, IT systems need to be prepared for a lot of people working from home. And that's something that you should look to have in place sooner rather than later. If your employees are unable to work from home, they can now begin to come back into the workplace, depending obviously on your industry. But social distancing must be implemented where possible. The guidance says that employers need to conduct risk assessments, and they need to publicize that risk assessment and engage in some level of consultation with their employees about how they've come to the conclusions that they've come to in that risk assessment. We're now beginning to draft COVID-19 health and safety at work policies for our clients. Previously, health and safety was kind of one of those things that people thought about, but really it wasn't a priority. But now clearly it is. So it's making sure you've got all your paperwork in place and you're in the best position for if an employee does challenge you on the health and safety position, that you've got everything that you could do in place correctly. There are obviously different categories of worker, and that can impact how quickly you bring them back to work and their individual risk assessments. So we've got clinically extremely vulnerable employees. So those are people with significant illnesses and such as cancer, etc. And the guidance at the moment is really they should carry on staying at home. Even if they're unable to work from home, it may be that the employer keeps them on furlough. Then we've got clinically vulnerable employees. That's those employees who are over 70, and it also includes pregnant employees. And again, extra guidance and care is needed if you have employees in this category, and you should be looking to carry out bespoke risk assessments for those employees. One of the questions that we've been asked is about the commute to work, because obviously that's technically before the working day starts. But if you've got a pregnant employee who has to get on the busy tube in the morning, that could really expose them to a significant amount of risk. So you should consider whether you can arrange a private taxi or some other way to potentially get them into the office and avoid them having to take the tube, if that's possible. And again, you've got overarching discrimination principles that you always have to adhere to. So whatever risk assessment you're doing, whatever policies you're putting in place, you just do need to bear in mind to not put either disabled or pregnant people at a significant disadvantage with the policies that you decide on. Obviously, these policies are going to be very important, as I said. So if you have employees who aren't adhering to them, then yes, you can consider disciplining them under your disciplinary policy. And I think that's not something that employees would turn their nose up at. And I think it would be beneficial for your workforce to see that you are taking these issues seriously and you're not letting an employee who's flouting your new principles almost get away with it, because then it could start a floodgate situation, and suddenly the policy that you've worked hard to implement actually isn't worth anything because no one's listening to it. There are other common issues about employees who are saying they don't feel safe to come into work. And again, that could be a potential employment tribunal claim. If the employee believes there's a serious and imminent danger to their health for coming to work, then potentially you've got a situation where any action that you take towards that employee could expose you to liability, because they would allege that you're taking that action because they've made that disclosure to you that they don't feel safe at work. So again, that's something that you need to consider. And we've also had a lot of questions about temperature checks, because this is something that a lot of employers are looking to do. And if an employee is detected to have a high temperature, which obviously could be a symptom of coronavirus, it could be a symptom of just a general cold or flu, whether you can take their temperature, do you need their consent, what are the GDPR issues? And there are ways that we can say, yes, absolutely, you can mandate your employees to have their temperature taken on arrival, but you need to manage that carefully. And it's the same with wearing of masks. So currently the guidance is saying that you shouldn't be looking or encouraging your employees to be wearing the surgical face mask, because they want to keep that directed at NHS and the care homes, etc. But face coverings can be used. So that's something that you can look to implement as well. So again, this is a topic that I could talk about for a longer period of time than I have today, but I hope it gives you a flavour of the sort of issues that we think could arise in the coming weeks as you look to bring your employees back to work. So if there are any questions on that, I'm absolutely happy to discuss it now.
Great, thanks very much, Harry. That's very insightful. We do have one question here from Carol, who's a hairdressing business, who they've been told they can return to work on the 4th of July. However, she's still very concerned, will follow the safety measures, but worried that it's too close contact with the customer. And can she put her staff on part-time?
Yes, you can absolutely put your staff on part-time. Again, depending on what the contractual arrangement is, you would more often than not need their agreement to reduce their working hours and probably their pay if you're looking to do that in accord with their reduced working hours. But yes, that's absolutely something you can do. But what I would say is, if you are complying with the guidance and if you think it's possible to implement social distancing, then that may not be necessary. And what you do want to avoid is a situation where you're saying to your employees, we don't think it's safe for you to be working full-time, but we think it's safe for you to be working part-time. Because as much as we don't have a full understanding of coronavirus, that sort of interaction can happen whether they work 1 hour a day or whether they work 8 hours a day. So my advice would be that you almost need to get in a safe system of work and be confident in it. And once you are, then they can work. Obviously, if customer demand dictates that you are looking to reduce their hours, that's a different question altogether. Oh, Joe, I think you're still on mute.
Beg your pardon, thank you. Thanks very much, Harry. That was great. We do have a few minutes left, so I wanted to just hand over to back to Alan at this point, just to touch on some of the tax issues, particularly IHT, and if we've got time, Ben, just a quick talk through R&D. So I'll just hand over to you at the moment, Alan.
Okay, thank you, Joe. I know time's pressing, so I'll just do a brief summary. One of the things about the current situation and the lockdown is making people think about their own affairs and even their mortality, and the best way to structure the affairs of a family to effectively financially protect the family. And as a starting point, what is essential for people to have is a will. it's incredible the amount of people that do not have a will, and obviously having a will enable an estate to be distributed in accordance with one's wishes. Whilst if one does not have a will, one will die intestate, and in fact, what will happen is assets could end up going to members of a family that you would not wish them to go to. So it really is imperative, and also from a tax point of view, you can structure your estate better by having a will, and it's incredible the amount of tax that is actually paid by people not having a will when they could have avoided it completely. In summary, estates over £325,000, or if you're a couple, over 650,000 will suffer tax at 40% on their estate. I mean, there are other reliefs available, but I don't have time to go through it now, but there are others that are available where you can have a higher estate and still not have any tax to pay. But it's never too late to plan for inheritance tax, or to mitigate inheritance tax. You know, there are plenty of ways that you can make gifts. There's something called a potentially exempt transfer, where you can give money cash away where you survive 7 years, and that value of that asset effectively is excluded on your estate after 7 years. There's small exempt gifts. There's certain interest in businesses which qualify for something called business property relief for trading companies, where effectively those particular assets will not be taxable on your estate. So what's really important actually is to sort of review your estate and actually assess the tax exposure and what steps can be taken to effectively reduce that tax exposure and obviously help the family. There's also trusts that can be used. You know, they are effectively a separate arrangement where assets can be held, again, outside one's estate. These are very good for ensuring assets are passed to perhaps younger members of the family, but still keeping control over those assets. And one other point I would like to make was actually is lasting power of attorneys, which are, I think, very essential for a lot of people to have. You don't need to be old to have one. In fact, effectively what you're doing here is that you are giving someone you trust, your attorney, the legal authority to make decisions on your behalf if you lose your mental capacity to do so in the future, or if you no longer want to be making those types of decisions yourself. And there are two types. There's a financial affairs type of lasting power of attorney and a health and welfare one. They are really essential, and they are really there to protect people's interests. I could say more, but I want also to let Ben in at the moment now so that he can add some input onto R&D claims, which is, again, something very, very helpful to businesses. So thank you very much. Thanks,
Alan. Okay, well, over to you, Ben.
I was going to say, I think we've probably covered quite an awful lot already today, and especially given some things to think about and a lot of food for thought. And so I think it's probably, we'll cover up R&D in another webinar separately, because I think that's something which we can go into a lot of depth about independently. But I do want to take this opportunity to really thank Harry for joining us today, because I think a lot of what he's given some great food for thought about the legal applications and things to think about when returning to work. And I think hopefully it's given everyone here some things to do and things to think about in the coming days. But no, thank you, Harry.
My pleasure.
Thank you.
Right. Okay, well, that brings us to the end of our webinar. Thank you to Alan, Ben and Harry. I hope everybody's learned something today. And as I say, any questions that we didn't get to in the Q&A, we will come back to privately on a one-to-one basis. This webinar has been recorded, so we will make this available on the Grunberg website and let you know when the on-demand version is available. So thank you all for attending.
Thank you.
Just to add, sorry, I should have added this a little bit earlier. There on the screen now is contact details for myself, Alan and Harry, should you have any other follow-up questions.